What's up, YouTube? It's Joe Catchpolia sitting on the couch making some money investing in fractional real estate online, as usual. It is the last Thursday of the month, so it's dividend day on Mogul. This is one of my best dividend days in a while. I made $143 on Mogul this month. Looking back, I had to go all the way to July of last year to have a similar performance, and I just wanted to look at this. Okay, what is this annualized compared to the properties that I have actually live and earning money? So I have $25,000 worth of properties that are live. So annualized return, yield under 7%, 6.8%. I'm going to jump into this particulars, but you can see that is dragged down a lot by my early larger investments, or my early investments, and some of them are larger, in the short-term rentals that are still performing extremely poorly. I'm very excited about how my pad splits are doing. And so my strategy on here is going to continue to be buying pad splits, but I want to just jump into each individual one and talk to you a little bit more. So, okay, this is very first investment on the platform, the Axelrod. This is a short-term rental in Houston, Texas. It's set up as a duplex, but rented out as the whole thing. I've made $0 on this one for a long time. And, they've had a lot of different discussions. You can see, though, my top-line revenue, you have to go all the way back to July of 25 to see top-line revenue that's higher than we did here in March. That's good news. If it did still lose money last month, right? Like even with this being the case, I mean, we need to be, $589 higher than this at least, right? We need to be 9,000, 10,000, 12,000 or more. And they're saying, okay, March had 17 nights booked, 577 ADR. A big jump over February, but we still have a long way to go. Now, this is one that they're finalizing the capacity upgrade, and I don't really know what that means. But then, they have they don't have the listing live. They think that listing with the higher, with the new pictures and the higher capacity, everything will be live in the next 30 days. In my experience, this is like really slow to be happening. I don't know if, obviously they just don't have the best short-term rental manager, or something is going on that's causing them problems with all of these STRs. I think it's more than just the market. They did mention, this is one of the World Cup host cities. They had a similar comment in another one that wasn't in Houston. So I was like, wait, what's going on? Well, I had to actually look up where's the World Cup, and apparently Dallas and Houston both are going to have some. So that made more sense to me because, you guys know I just don't know sports at all, and I thought they were just copying and pasting and had screwed that up because one of the Dallas ones said that as well. But so anyway, my largest investment on the platform before I realized how quickly they pumped out properties, and so I've now, since my average, I've decided I'm doing 2,500 in each one. I've gone all over the place, right? I started to do much smaller, and then realized, I'm going to get a 10K for every single one, so I better put a little bit more in each one. But let's jump into the next one. The roads. This is a Mesa, Arizona pad split. This is one of the pad splits that they always point to as one of the top performers, and no question, right? It's 11.8%. 8-9% annualized yield. This month really crushed it, 1.15% monthly yield, and I think they didn't really have much to say. Yeah, saw light tenant cycling in March with one new move in. So that's even with a move in, and this is crushing it, right? And this is why they are comparing properties to the roads, because it's all last year it was over 12%, or it averaged over 12% for last year. Very good performer. My first short pad split on the platform, and it's been one of my most consistent performers. The WAGs, this is another Houston area short-term rental. This is the one that has that title issue that we actually thought we were losing this one, and then it's back. They have ramped up occupancy and top line revenue quite a bit, but it is still losing money on a monthly basis. They did mention they're still working on, the administrative title claim resolution remains in progress. We'll see what happens with that. But like they're saying, their focus is still just on making sure the property is operating. Yeah, we lost a decent amount of the ramp up time period with this one. Hopefully it gets back on track. And again, this is another one they're saying we're trying to keep those summer days open because they think they'll get higher, be able to book them for higher because of the World Cup. We'll see how that works out. One thing to keep in mind, though, if they do and these crush it this summer, don't expect it to do that well every year, right? The next one is the Mafee. This is a Decatur pad split, Decatur, Georgia. And yeah, it did, it had a little bit of a drop this month. Why is that? Cycle through, okay, yeah, room 7 cycle through 3 times in March. So a new move-in, one of the new move-in fees absorbed by pad split. That's nice to see. Relatively stable months beside that one turnover. Well, okay. So why did we do... it didn't do so much worse than the other months. And our annualized yield is, just below 10% at this point. The Johnson, this is the Austin, Texas short-term rental. Again, this one actually spit out some cash flow this time, right? So that was good to see. Not amazing amount of cash flow, but it's good to see one that's actually cash flow positive because most of their short-term rentals are doing very poorly. And they mention, let's see, they're not trying to keep their ADR above $800 as they had previously forecasted. I think for this property that price point makes a lot of sense. It is a real nice property in a good location. Hopefully they're able to continue this, but you can see, top line revenue, $15,000 only gets us a monthly yield of 0.26%. So they've got to push this even further before we're actually significantly profitable there. The Celeste, another Houston area short-term rental, and another disappointment. But our at least our monthly loss is shrinking, and you can see this is why my average on here is so low. Like my pad splits are doing so well that they're able to cover all these. Except that all these losses don't show up as negatives, right? Because they're coming out of our reserve. So really that annualized number I showed you in the beginning should be even lower. They're basically all the same comments though. This one again, listing refresh, updated photography is a work in progress. Those sorts of, I just don't know, like that, it shouldn't take that long to do that. If it's not coming with a renovation. And I don't know, like whenever we've decided to do that on short-term rental listings, like it's not, you get the photography done and then, it shouldn't take you more than a day or two at most to get your actual listing updated. So I'm not sure, why there's the delays on those. It'd be good to, I do like that we're getting a memo every single month on these ones that aren't doing well. Or I think maybe now they're giving us a memo every single month on all of them, but especially on these ones that have had like just prolonged bad performance. I like to see, all of them are moving in the right direction. But are they going to, are we going to see that momentum continue, or is this going to be just sort of a break-even property? It's going to be interesting to see. The Victor, another Atlanta, Georgia area pad split. And this is another one that's done extremely well for me, right? Like if had, this is just a monster month, 1.39% monthly yield. Let's see what they have to say. Anything? Refilled February's vacant room in March with 1 new move-in, 100% occupied. And then collecting rent from February. So that's what you can see. February had a dip. And then March we had a really strong month, and that's why, right? They collected some from that was actually from February. But, annualized yield currently 12.28%. It's amazing, right? These are the ones that I want to see more of these on the platform, and it's why, like, when we see the 8% yields, I'm just like, I feel like we can do better. I don't know. So it'll be interesting to see how these continue. The Andres, another pad split that has just been absolutely crushing it for me. I'm just not even going to look at the memos on some of these that have just consistently done well. the Chelsea. I mean, this one my annualized yield on the Chelsea is 15% for this year. I mean, that's unbelievable. What do they have to say about it? Most consistent pad split performer with 0 turnover. Yeah, I mean, I wish I had bought more of this one. You know, this one, the Andres, the Rhodes, like a bunch of these early pad splits are just absolutely crushing it. And hopefully that we'll see that some of the newer ones as they ramp up that they get to be similar. The Ratliff, Douglasville, Georgia area pad split. And again, I mean, look at these numbers. I mean, absolutely crushing it. 0 turnover, so that's why clean. You know, I mean, so this is like a perfect month. But I mean, a perfect month gets you 1.5% yield for that month. I mean, it pulls up the year for us basically by a decent amount. The Ven, I think this is Lilburn, Georgia. I think this is one of my lesser performing pad splits. 5.76%, not great. Fully occupied, but 0 turnover. But higher OPEX for quarterly maintenance items. You know, what exactly those are, I don't know. They're saying they're quarterly items. Hopefully, we'll see how that impacts us going forward. But yeah, that's one of the things, as much as I think that the ones with less bedrooms have less risk, you can see that the OPEX has been a bigger percentage of this one than it has been for some of the others. And it makes a lot of sense, right? Like, because once I've got 6 bedrooms, adding a 7th bedroom isn't costing me a lot more money. Adding an 8th bedroom isn't costing me a lot more money. So that's something that I think I have to think more about when I'm analyzing those and thinking about the bedroom count. The Hugo, this is the Dallas area short-term rental. This is the one that I mentioned at first. I thought they had just copied and pasted about the World Cup, and then I realized, like, oh, no, it's actually going to be here too. Set to near, so April there's almost 100% occupied, looking to nearly 2x March. Well, we kind of have to, right? Like, because we're still losing money here. So, you know, coming up into these summer months, or, you know, late spring, early summer, you know, we need to have a really strong good months to carry this through. You know, we've seen what some bad months can look like here. Hopefully that we do see some better performance, because again, this is just another short-term rental that's done extremely poorly. This is why I haven't been buying any more short-term rentals on the platform. I just don't have the confidence that they are. You know, I don't know. It didn't seem like a selection problem to me, because I really liked the assets that they picked, and so I don't know if they picked a bad manager. I don't really understand how their short-term rentals have done so poorly, where they did buy properties that had in-place income, or, you know, had historic income. One of the things that I wonder is if they were somehow not getting, you know, all the details on the income that they should have been. So hopefully they figure this out. I haven't looked at, you know, how some of the more recent short-term rentals are doing. Hopefully they're doing better than these, but all the ones I own are almost all the ones I own are pretty terrible. Yeah, well, all of them are not great, but I'm going to get to one that's at least making some money. The Pinkman, this is another, let's see, this is Atlanta, Georgia, pad split. Before I forget, please like and subscribe. In the description of this video, I have links to all the places I'm currently investing in fractional real estate online. Please do your own due diligence on all of those platforms and on any of the properties you see me talk about. Just because I've invested on some of these platforms and some of these properties doesn't mean it's the right answer for you. Also, in the description of this video, there's a link to a Discord channel that I have set up. There's over 270 of us in there talking about, you know, sharing due diligence info, talking about different strategies, platforms, properties. You're welcome to join. There is zero cost. It's not a sales funnel. I will never DM you trying to get money from you in any way on that platform. There are some fake impersonators of me that are doing that. Please report them if you see those people. Okay, back to what we're doing. The Pinkman, this has been actually maybe my worst performing pad split, and it has just very consistently had very high OPEX. What do they have to say here? Return to full occupancy, 2 move-ins, 10-day booking fee, which is about $700 of March net, and 2 rooms sat vacant for the majority of the month. So yeah, I mean, we also had poor top line, but this bigger OpEx number has been killing us. I don't know if that's just going to continue forever. This is one that we knew there were some like renovations and stuff going on when we bought it. So, and that there were some items that would need to be addressed. But if this continues, it just seems really difficult to see how we're going to make money with this one. So yeah, another losing month on that one. So not every single pad split is a winner, right? We still have to pick and choose wisely. But on average, I mean, they're just crushing it. The Gilmore, this is a Tempe, Arizona pad split. This is one, it hadn't done the greatest earlier in the month or earlier this year. It was still high single digits. But 1.5% for the month of March, and bringing us up closer to a 10% annualized. Yeah, full occupancy through March, 0 turnover, and no bookings drag. So you can see, okay, our top line revenue here is really great, right? 8,000. We haven't seen that, I don't think, ever on this one. And if we can start to operate closer to this, I mean, I don't think that obviously this is a perfect month, right? But if you get closer to 1% on these, a 12% yield would be amazing. But I mean, anything, I'm fine with 9.75, right? Like if that were my annualized yield on all these deals, plus over time I'm going to get some appreciation, and I'm going to get some some of these yields are going to grow. I'd be perfectly happy with that deal. And so again, the pad splits just continue to perform well. This is the Swift, which is a short-term rental in Glendale, Arizona. This is my best performing. Oh yeah, this is one we had to make a vote on. That's interesting. I didn't notice they put that there. But so this is one of the only ones that I'm making money on, or that I've made some money on. And you can see February we had a little bit of cash flow. March we have significantly more. Obviously we have these big negative cash flows that we had early on. I think they're still in the process of switching managers. They've mentioned they refreshed the listing, going live any day now, and will be shared shortly. This is the final step to moving the property from the prior manager to the local market. So expert. So I think it's a good move for short-term rentals, especially. I really don't like many of the national managers. I think, you do need to have that local expertise. Because it is a very hands-on, process, right? And you can't just, it's tough to do, the managers that I like here in town all have people on staff that can run out to a property at a moment's notice if necessary. But anyway, it's good to see this one moving up a little bit. Obviously it's still not a great yield, but I have more hope for it than some of the other short-term rentals. It is the last short-term rental that I bought on here. We'll see. I don't expect to buy any more going forward until they've really proven that they can operate short-term rentals in a way that they're at least somewhat comparable to their pad splits, because. Again, my pad. If I just separated my pad split portfolio on Mogul, it would just be I'm absolutely crushing it on this platform. I just have bought some of the short-term rentals too, and now part of that I think has to do with the economy and is cyclical. And there might be times where the short-term rentals crush it compared to the pad splits. I don't think that's going to be anytime soon, though. I think the pad splits in a down economy are the business plan that's just going to outperform. One of the things, I haven't mentioned this in a while, I do think that most of the short-term rental properties have a better chance of getting outsized appreciation compared to the pad split properties due to their locations, due to the physical attributes of the properties and stuff like that. So there's still a reason to keep them in the portfolio, but I'm just going to be much more careful because, we just can't withstand all these negative cash flows, for any long period of time. The Blitzen, this is the Phoenix area pad split. This is one of the first ones that I bought. It might be the first one that I bought where it was not, it wasn't operating, right? It was one that they're going to renovate and list for sale. This is the first month that we've got paid anything. 7.5%, is the annualized yield, but that's with no debt service. But then when you look at the memo, okay, they had 5 move-ins this month. They had 3 late move-ins in February where those fees were still impacting the month of March. So we just don't really know yet what's going to happen with this one. It's the first month that it's live at all. So it'll be interesting to see how that turns out next month. Yeah, we just nothing really too interesting there. And then the Goldfield and the Buffett, neither of those have their, one is supposed to pay out way out in June and the other one in May. And this, I took those 2 out when I gave you that annualized number because I just wanted to see of the ones that are operating, what's my yield. And over time, as my portfolio continues to grow, the ones that I just purchased and aren't up and running yet are going to have a smaller and smaller impact on my performance. And so it's why I want to look at how does it look without that. Now, did I actually look at my annualized yield the way they calculate it here, 5.17%. But that is looking at everything that I own. And then, again, it's just really dragged down by how poorly my short-term rentals are doing. I really hope that, we've seen, momentum in the right direction on those. Hopefully they start making some money, at least to the point where I'm not, we just can't keep, we do have large reserves on all the short-term rentals, but, the more that we start to deplete them, it gets pretty scary over time, right? Like I don't want to be in a spot where we just have to fire sale these or something. And I think we're a long way off from that from any of them. But we're closer than I want to be, right? I want to see them all do real well. So that's how my portfolio is doing. I'm curious how yours is. Please feel free to jump in the comments, jump in the Discord. Let's talk about it. If you're watching this before the webinar, today is April 30th. The webinar's tonight. Hopefully this video is posted before then. But don't forget to jump in, watch that. It seems like I think this is the one that they have the pad split president on there for some Q&A, which is nice. Although it kind of dilutes the time that we have to ask them questions. Make sure you come with your questions prepared. Ask them early because they do go in order. And they do answer questions. If they don't have time to answer them all, they put out they send out answers to questions after the fact too, if you ask them and get answered. Anyway, that's all I have for today. Until next time, I'm going to just keep making mistakes so that you don't have to.